What's up traders, Tom here with another video. Today we'll be discussing our thoughts on the stock market, non-farm payrolls, and our technical analysis of several pairs including the S&P 500. Stay tuned. It may come as no surprise to subscribers of this channel that I've been talking a lot about the difference between investing and trading. Now, whilst investing in quality over the longer term is of course a proven strategy and it provides great opportunity for your portfolio, this crisis, I believe, has most likely created a 12 to 24 month massive opportunity for traders to see increased volatility and swing-based trends. I've been talking a little bit about the kangaroo market where it's up and down, and I think that's really in play, especially when it comes to this recovery. We have some companies doing amazingly and some companies not doing that well, and that means as a greater whole, we're going to see big swings in the indices over the shorter to longer term. It's a sea of green today ahead of non-farm payrolls, and this is no surprise. As we know, pretty much the stock market will always try to go to, or any instrument will try to go to a level of resistance or a level of support before key economic news. We discussed this in the video yesterday, so definitely check that out. And we talked about how there's big key resistances and supports in this range on the S&P 500, and the market will generally gravitate to a key zone before news. So the US is going to most likely record jobs growth, and that's the expectation in June. And of course, that's masking really the broader labor market weakness. The main reason this is happening is we've seen openings in many states. Now we're seeing shutdowns. So remember, this is going to be a bit of a lagging indicator. But as a general whole, more people have been going back to work as the economy partially reopens. You can see the difference between the expectation last time. This is forexfactory.com, by the way, and the economic calendar, and the difference and the expectation. And then this time the expectation's up here. So if it comes in different by too much, expect high volatility in the market, and especially currency pairs and hedge pairs alike. I just want to also let people know that of course we're going to most likely see another stimulus bill passed within the next couple of weeks. If we do, the market will most likely like this news. So Trump's obviously backing the work incentives package. The Democrats are also pushing to extend the $600 weekly virus unemployment benefit, and we're seeing a lot of continued government strength. In terms of economists and what they expect for the S&P 500 and the general stock markets, most people are expecting something like this reverse of radical kind of concept, where the market goes down quickly, comes back up quickly, and then potentially trades in a range as we see some companies do well and some companies do poorly. Now, a few people might be saying, oh, we've already seen a massive V-shape, and that is very true to the NASDAQ, but do remember the NASDAQ, 40% of it is 5 companies, and they're all tech. So it's a little bit different to the broader economy and the broader stock market. There still is a lot of value in certain stocks that have been hit hard by this virus. This is going to be something that we need to think about, and something that we need to think about especially as traders. In terms of what most people think is going to be the big problem over the rest of the year, a lot of people are thinking it's going to be the second wave or first wave or whatever we call it. I tend to think it's probably going to be a lot more political based. I think a lot of the people in the comments down below, you're some smart cookies, and basically everyone knows that depending on what happens with this election, we could see tax reforms and big companies become accountable. I'll be doing some videos on this channel, so make sure you subscribe, hit that bell, and of course like this video if you enjoy the content, about what if the Democrats won and how to potentially set up a portfolio that can weather that type of storm, because it will hurt many companies, and there's actually percentage point differences, and they're pretty large if the Democrats win the election. Another quick bit of news, Tesla now overtakes Toyota, becoming the world's most valuable car maker when it obviously is not selling the most amount of cars. It's pretty amazing that they've done this. Elon should be congratulated, and he has done an amazing effort. I did not believe that this was possible without them selling a lot more cars. So well done to Elon and the team. On to the technical analysis. These are the futures markets just ahead of the non-farm payrolls result. We still see the dollar index weakening. It has broken past the 97 and it has sold off ahead of the result. we are seeing a very strong level of resistance and the 200 simple moving average on the 4 hour sitting at about that 97.60 zone. If the market was to come back up here and then do something like this, where we see the role reversal after the confirmation close, and for people that have been asking me about the confirmation close, basically we want to see that candle close on that time frame and lock it in the system. Effectively, it means that whenever you go back and look over history, there'll be a candle closed above this zone, and that means that the momentum and the people that are actually trading in the market and investing in the market have pushed it up there, and they are committed to pushing it to that level. The role reversal would happen here, and we would see effectively the resistance become support. That would be a very good technical opportunity, and then we would hopefully see further bullish momentum in the dollar. As we know, the dollar is going to be a risk on, risk off sentiment. If the dollar gets under the 96.45, expect further weakness in the US dollar, and this could mean that we're seeing new highs potentially as well in the S&P 500, or at least it testing that high of around 32.30 plus. The US dollar is a key thing to look at when you're doing technical analysis and when you're doing analysis in general on the stock market. In terms of the NASDAQ, it continues to do its own thing. The 20 EMA just keeps holding. We've talked about this a lot. We are now at all-time highs in terms of the NASDAQ, ahead of the jobs figures. And we've talked about how the NASDAQ may even be going to 11,000 purely just to go hit that technical, hit that psychological key level ahead of earnings reports. Remember, we don't really know how well these tech companies are doing compared to their valuation at the moment. All we know is that they've definitely done well out of the crisis, but that does not necessarily true. I mean, we have Facebook and Google potentially seeing actually ad slumps, whereas other companies are doing quite well, like Amazon, etc. So it's going to be very interesting to see and cover the earnings reports over the longer term. Just a quick update on gold. We saw weakness come at just before that 1790. I'll tell you what, I obviously had 1790 in my system in terms of an area, and I'm pretty bullish gold just in general until the S&P 500 hits all-time highs. But it's interesting to see how many people had now picked that 1790 level. Notice how the market rejected before the 1790 level, and that is because effectively so many people were thinking it. Heaps of people were not necessarily thinking 1800, they were thinking 1790, and therefore the market will stop just before. It's an interesting concept, but we probably expect gold to continue showing some strength, and that will show strength over the longer term. And remember, usually gold will show strength until the S&P 500 hits new highs. That's been the general trend over previous crisis periods. The VIX is low in terms of it has come right back down. We have seen a break under 30. It has closed under that. And that means that the fear in the market is lessening by the day, as most people believe that the Fed and of course Congress will come and save the day again. They're probably right this time around. We'll have to see what the damage is in this current wave, or whatever you want to call it, in terms of closing economies and how potentially long some states may have to stay closed. I thought it was worthwhile mentioning Bitcoin just quickly, just to discuss this 10,200 that Bitcoin has not been able to close up above for a very long period of time. We're still sitting at kind of a level where Bitcoin is trading within a range, but I always say on this channel, it's important to set alerts. And I think setting an alert above 10,200, waiting for a weekly close, could be a key zone. If we scroll down into things like the 4 hour as well, we can see that it's broken out of this range just yesterday, and that we've seen it come back down and is testing the role reversal at this 9,200, where we've also got a 4 hour 20 EMA. So this resistance may act as support, and we may see some buying pressure here on Bitcoin versus the US dollar. On to our thoughts on the S&P 500. Well, basically the S&P 500 is looking relatively bullish ahead of the non-farms figures. It is pushing to pretty much where we'd expect. Yesterday we mentioned we'd probably see strength when it broke past this zone, and that strength would lead into most likely around the 3150 area, where previous resistance will act as resistance again ahead of the news. Well, in this case, that is what we're seeing. We're seeing a 2050 cross on the 4 hour. We are seeing, of course, the 3,000 hold again, And if the market gets above this zone, what we would like to basically have happen is the market would go above, it would then come back down, it would test the previous resistances, and that would become support in role reversal, and a trader would then look to buy it up into the 32, 30, 32, 40 zone. Now, what a novice or somebody that's just looking at trading for the first time would generally do is they would actually just buy that zone. Okay, they would buy the 3150. I'm going to create a big video about this and share it with everybody, but the best thing to do actually is to dial it down. So at the moment, we're on a 4-hour. So if you then went down to, let's say, a 15-minute chart or a half an hour chart, you would actually dial down this support resistance level where you'd be looking at the resistance becoming the support, and then you would look for a change of trend. So you'd look for basically a high, higher low, and a higher high coming off this level of support, see that change of trend, and get involved in the market. This gives you that next level of confirmation. I talk about it all the time. I talk about it in our courses where we teach people. I talk about it in our private Discord group and our weekly webinar, which we run for free. So think about signing up for that. And basically, we always go on and on about change of trend, confirmation, as many reasons as possible. If you have 6 reasons that are all separate and all solid to be in a trade, then usually the statistics are going to be better in your favor. Also, taking breakout strategies may sound like a great idea, and it can be. And of course, at the moment, there's some explosive breakouts in many stocks. But generally speaking, over the long term, conservative entry points where breakout happens and the market kind of cools off and comes back down and tests that role reversal where the resistance acts as the support is the better play. And especially in currency trading, that does seem to be something that works very, very well. Hopefully that makes sense. We've only covered it a little bit briefly today, but I think that many people will get some value out of that. Where do we expect it to go after it breaks past this resistance? Well, we expect it basically to go back into this 32.30, 32.40 high. You'll notice I have an alert set here in TradingView just to show everybody the kind of alert that you'd want to set and where you'd want to set them. And if it comes to this level, again, we would expect to break high, wait for it to come back down, and then on to test the previous resistances over to the left here, where we've had that 33.91. Do I think it's going to happen in the next couple of weeks? It seems unlikely, but never say never with this stock market. If we see huge stimulus, if we see great jobs numbers, if we see Fed Powell come out and just go crazy again, then I doubt he will, but if he does, then all of a sudden we could be at all-time highs. I want to just quickly cover this story about Facebook, and it just shows you the current market reactions each way and how fast you need to be, and again, the importance of setting alerts. So basically, Zuckerberg is pretty much of the opinion that all the advertisers will be back soon enough, and they most likely will. But take a look at the massive V-shape that's happened here in terms of the sell-off coming into this news and the recovery, even though Facebook has temporarily lost these advertisers. It shows you how aggressive the market is towards the bull side. And that's why I think it's a great trading environment right now. If you've enjoyed this video, please make sure to give it a thumbs up and of course subscribe and hit the bell for more content covering all things finance on this channel. Happy trading and investing, everybody. See you in the next video. Bye.